Hello traders, welcome back to Nova channel and let's continue the new topic today. When to take profits with a cup and handle pattern. Deciding when to take profits is crucial in maximizing the effectiveness of trading the cup and handle pattern. Here are strategy and considerations for determining the optimal movement to exit a trade. And you need to follow three below steps. Project the price target. Set a profit target based on the cup depth, projecting distance upward from the breakout level to establish the take profit exit point. And the second thing is the resistance levels. Consider the structural resistance levels from a previous uptrends as the potential zones to take profits, especially if the price nears these levels. And the last point we need to pay attention to is trend reversal indicators. Watch for reversal signals using candlestick patterns for indicators like RSI or MACD. Signs of weakening momentum might signal a time to exit. And now let's find out the advantages of trading on the cup and handle pattern. A cup and handle pattern offers several advantages to trader, making it a popular chart pattern in technical analysis. Some of the key advantages are high probability of success. The cup and handle patterns had a high probability of success, making it an attractive trade setup for traders. According to technical analysis experts, this pattern has a success rate about 65 to 70%, researched by Thomas Bukowski. And the second advantage of trading on the cup and handle patterns is defined risk-reward ratio. By identifying the key support levels and setting a stop-loss order, traders can determine their risk-reward ratio before entering a trade. Most traders look for at least a 1 to 2 risk-reward ratio. This helps in managing risk and avoiding large losses. But if the trade worked out, the gains could cover multiple losses. And the third advantage you need to pay attention to is easy to identify. Once you understand the characteristics of a cup and handle pattern, it becomes easy to identify on the price chart. This makes it accessible for both beginner and experienced traders alike. And the next advantage is strong price movements. The price movements after the cup and handle pattern breakout tend to be strong and prolonged, making it an attractive trade for those looking for significant returns in a relatively short amount of time. However, not all traders work out, so alternate a stop loss to minimize any potential losses. And the last advantage is broad market application. The cup and handle patterns is usable across diverse markets, including stock, commodities, currencies, indices, cryptocurrencies, and more. On the other hand, there also have disadvantages of trading on the cup and handle pattern. Along with many advantages, the cup and handle pattern also has some drawbacks that traders should be aware of. The first thing we need to talking about is fall breakouts. As with technical analysis pattern, fall breakdowns can occur even after a clear cup and handle formation. Traders need to be cautious and wait for confirmation before entering a trade and incorporate an appropriate play stop loss to mitigate losses. And the next disadvantage is subjectivity. The pattern's identification can vary among traders, leading to different interpretations and unreliable entry and exit points for some. Identifying a cup and handle pattern can be a time-consuming process, especially for traders who are new to technical analysis. It requires patience and practice to spot this pattern accurately. While the cup and handle pattern has a high success rate, it is not always reliable by itself. Traders should consider other factors such as market conditions, news events, and overall trends before entering a trade sold based on this pattern. As the cup and pattern is a bullish continuation pattern, it can be challenging to trade in a downtrend. It can be challenging to trade in a downtrend market. Traders need to be cautious and wait for a reversal before considering this pattern. And next, let's find out what are the thoughts of some traders about V-bottom cup and handle pattern. As you can see the two illustrated photo, the V-bottom cup and handle pattern, a variation of the traditional cup and handle, often spark diverse opinion among traders. This pattern features a sharper and more rapid rebound in lower half of the cup's formation, resembling a V shape rather than a U shape. And here's some common viewpoints. A U-bottom pattern. A U-bottom pattern is characterized by a slow, gradual decline in prices followed by stabilization, allowing for psychology shift among traders. This leads to exhaustive selling pressure and a steady recovery indicating stable, sustained upward trends. A V-bottom pattern emerged from a rapid decline in prices due to significant events followed by aggressive buying. This sharp recovery reflects strong bullish sentiment and a quick market reaction, indicating brief but strong confidence in the market. And U-bottom are favored by traders looking for stable, long-term investment, while the V-bottoms attracts those seeking rapid returns from sharp market reversals. Continuing to the lesson today, I will share with you some common cup and handle pattern mistake to watch out for. One common mistake is prematurely identifying a cup and handle pattern before it has fully formed. Why is it possible to trade the pattern in stage? It is important to take into account other confluence that can assist in the decision-making process. And here are a few additional common mistakes to be mindful of. A depth of the cup may vary, but it is generally recommended to be between 1/3 and 2/3 of a previous uptrend. When a cup is deeper, requires the bulls to expert more energy than usual to push their shares price back up to its previous high. Consequently, the handle breakout could be affected, potentially resulting in the price not continuing its expected upward move after the breakout. And the next common mistake is handle too deep. The handle is meant to shake out the last week holders near the cup highs. If the handle trends lower too much, then more buying strength is needed to simply get the price back to the handle highs. That leaves little to no strength left for a breakout attempt. A handle that corrects to D can lead to a false breakout or no breakout at all. And that's it, the lesson today. Thank you for your watching and see you in the next video.